Hi, everyone. We're here at the Metals Investor Forum in Vancouver. We have Andrew Pollard, president of Blackrock Silver. Andrew, thanks for being with us.
Always a pleasure. Good to be back.
Thanks very much. Andrew, why don't you just give us a 30-second pitch? Who's Blackrock and what have you done?
Yeah, well, Blackrock, we're advancing our flagship Tonopah West project, which is a discovery we made back in 2020. We've gone from first drill holes. We've already delineated 100 million silver equivalent ounces. And right now we're focused on doing everything we can to get this, to get underground and ultimately producing. So it's been a wild ride so far. This year, we're just finishing off a 35,000 meter drill program that's focused on resource conversion. We're really focused on four things this year: upgrading our ounces, expanding our ounces, permitting the project, and de-risking the project towards a final production decision.
Excellent. So that's a great overview. Let's get into a little bit of detail. You already have a PEA on Tonopah West. And so can you first maybe start with giving us some highlights on the PEA?
Yeah, well, we're blessed with the project being extremely high grade. This is the highest grade silver development project globally right now by a significant margin. So our PEA, which, we've done 35,000 meters of drilling since, and it's going to be updated by this time next year. That initial PEA established a project that has a production schedule of about 8.6 million silver equivalent ounces on average at cash costs under $12 an ounce. So potentially be one of the lowest cost silver gold mines globally. The PEA was done at, when we did those base case assumptions, it was done at $23 silver and $1,900 gold. And back then, I mean, it had a 40% after-tax IRR, roughly a 2-to-1 NPV to CapEx ratio. And we think it's going to get a whole lot better with all the work we've done from investing in our project just the last 12 months.
Would you be able to give us some idea of, if you were to use something closer to spot, what the IRR might look like?
Well, we thought we were being ambitious in that initial one when we had we showed what the economics would look like at $2,300 gold and $2,760 silver, and there, the NPV goes from 326 million up to about $500 million US. And well, gold and silver are significantly higher than 2,300 right now. So what's nice about the project, though, is we've shown it's going to be highly robust at really, really low prices, but it's got a substantial amount of torque to the upside. So, I don't need silver or gold prices to keep running. I expect that certainly gold is doing the heavy lifting now, and silver, though it's been strong, it's that 100-to-1 silver gold ratio is historically high. But I don't need it to get any better. Like our project, this is something that's, we're just going to put one foot in front of the other, methodically advance it. And this is one of the few projects globally that can get advanced really, really quickly, because we're on private land in America, and private land means that you already have an expedited permitting process because we sort of circumvent the federal government.
Right.
So, we're, aside from all the work we've done on upgrading our ounces and expanding our resource base, and background work in terms of data collection and such,
Right.
We think that by the time we have all of these results incorporated into our new resource and are able to get our engineering plans updated, that we'll have all the other background information we need to make a submission to the regulators next year.
Wow.
And go for full permits on this thing. So, there is really no Lassonde curve on this,
Right.
because most developers lag because they're sitting around waiting for 5-10 years,
Sure.
not knowing. With us, everything's being driven forward concurrently, so that by the time we're ready, by the time we know roughly the mill size where it's going to end up, because we think it got a good potential to get bigger based off of just the ounce potential we've recently uncovered. By the time we're ready with our engineering designs, we'll be ready with the environmental applications, and it's just a straightforward path from there.
Excellent. So how big is, you mentioned, I think 35,000 meters. So that's the size of the current drill campaign. Can you tell us a little bit about where you're drilling, what the goals are with this campaign?
Yeah, well, it's two-pronged. First is upgrading and de-risking the initial years of mining. So what we're doing is that PEA that was done at the base case assumptions laid out about a 2.3-year payback period. So what we want to do is effectively convert our inferred ounces to M&I category through the first 2 to 3 years of production, effectively making it a no-brainer to go underground. So from a numbers perspective, that's been the bulk of it. We've hit some phenomenal grades in this. Our resource conversion program's gone extremely well. In fact, just a few days ago, we announced we hit a 11.5 meter zone of just over 500 grams per ton silver equivalent, the thickest zone in this area I think we've ever encountered. So, what's nice about whenever we hit thick intercepts, and I laid it out in our last news release, anytime we hit 4 meters or 5 meters, where all these tons are, which is where, these big broad zones are, that's where all of our grade is too. On average, when we're hitting these thick zones, we're hitting 500 to 800 grams per ton. So not only are we generating substantial tonnage, but the tons have grade. And that's what's going to, I really think what will be a huge lever on our economics once we get to that, once we're able to incorporate the new M&I resource in September.
Super. So I was going to ask what kinds of intercepts you've been getting, but you've just answered that. A resource update is planned for Q3 this year. Can you give us some sense of the magnitude of the increase? I mean, I know that's, looking forward and
yeah. Well, what really the focus there is that M&I de-risking those initial few years. I expect it's already very high grade. I mean, as I said, this is on an inferred basis, but by tightening up the drill spacing and, having released already about 85% of the assay so far, we've only got one more trench to come.
Okay.
So the drilling for that's effectively already done. We've seen higher than average grades on our M&I drilling versus our inferred resource. So I expect that M&I grade potential to go a fair bit higher. In addition, the other prong of the drilling that we've done this year has been on expansion. How do we take our mine life from 8 years to 10 years and beyond, and potentially then start looking at the trade-offs of using a bigger mill and getting more production through there. And I mean, just in the last month, we announced we've connected on 500 meters step outs right along strike, right extensions from my current mine plan to the northwest. And then about our very previous news release was we encountered a brand new gold trend and silver trend that goes from the eastern margin of our existing mine plan for 1.2 kilometers of new strike potential. So we're adding strike to the east and we're adding strike to the west, both of which bolts right onto our existing system. So we're not constrained by geology here. It's just a matter of getting the drill holes into it, but it's big and it's high grade and it's going to get bigger.
That's exactly what you want.
Yeah.
That's ideal. So what are the kinds of things we should watch for next as observers and or participants, stakeholders?
Yeah, well, I think we're the only development company out there right now that's all inferred resources. So that's weighed on our valuation, which is why we've put such a focus on generating and showing the market that the high grade hangs together with delivery of this M&I resource. I think that's going to be a significant re-rate for us as it establishes the project and the grade profile to a new range of investors. It also starts, getting people very excited about the prospect of actually building this thing.
Right.
The other big thing for any developer is permitting. And that's, we want to be in a position where this time next year, we'll have everything we need. We'll have the entire scope. We'll have the entire design engineering finalized, at least for that initial decline and test mining, to make our submission. And once we make our submission, it should be a pretty straightforward process from there. So permits are huge. Obviously, permitted projects command a lot more attention than unpermitted ones, and generally a much higher valuation. And just keep adding ounces and refining this thing, one step, piece by piece, towards that ultimate production decision.
Excellent. Well, thank you so much for that great overview of Blackrock. Lots of exciting things to watch for in the next couple of quarters, and we'll certainly keep an eye out for all of that.
Yeah, thank you. That's got to make for a good summer, I think.
You bet. Thank you.